Crypto and taxes. Two words that you don't think about together often, except when it becomes time to pay them. So we've got Shehan from Cointracker with us. We're going to talk with him about crypto taxes, kind of give you a background on where they came from, where they're going, and what you as a crypto investor need to do in order to stay compliant with your government's tax laws. So, Shehan, welcome. Thanks for joining us.
Thank you, Kris, and also the Exodus team for having us.
So, Shehan, you're in a profession that most people don't even think about. Can you give us a little bit of background on yourself and really kind of what brought you to the center of crypto and taxes?
Yeah, sure. So I'm a CPA. I'm coming from the CPA background. Working at public accounting firms for several years. But for the past 2 to 3 years, I have specifically focused on cryptocurrency-related taxation, STOs, and things of that nature. And then, recently I joined with the Cointracker, which we're gonna, go through, in the later of this video, which is a software that helps you calculate cryptocurrency gains and losses for tax purposes. So that's my background. Pretty much, most of my time is spent on, researching the cryptocurrency-related taxation issues, writing on Forbes about crypto, and helping clients.
So, how do crypto and taxes work?
Mm-hmm. Great question, because especially starting this tax season, crypto in the tax world is going mainstream. So if you look at the Schedule 1 of the upcoming tax forms, there's going to be a question that the IRS is going to ask every taxpayer, whether they have received, transferred, sold, or have financial interest in any cryptocurrency. So by putting a question like that, IRS is trying to gather more data about the crypto users, because the compliance rate is super low when it comes to crypto. So if I had to explain the taxation for crypto in simple words, it's just like stocks. You trade stocks, you pay a certain amount, which is the cost basis, and then you sell that stock for some amount, and then the difference is taxed as capital gains. And if you make a loss, those are taxed as capital losses. So in essence, the crypto is taxed in a similar way to stocks. But if you go into details, there are little things that are not applicable to crypto world. But just for the simplicity's sake, just think that you're just trading stocks.
So I guess the differences of stocks, if you invest in stocks, you get an annual statement that you're able to go ahead and put onto your tax forms in order to calculate, or have your CPA calculate how much money you owe the government off of whatever gains or whatever credits you can get from the losses of those. Crypto doesn't necessarily act the same way as that, because let's say I have a private wallet and I'm investing in XYZ currency, and the only way the government's going to know is if I report it. Now, I know that there are certain exchanges will send those tax forms to the U.S. customers that show what their trades were in order for them to calculate it. So as somebody who's not going to receive these, how do I best find out how much money I owe the government on my crypto trades?
So as you pointed out, Kris, that's a major distinction between trading stocks versus trading crypto. Like you said, if you trade stocks, you're going to get a Form 1099-B from your brokerage like TD Ameritrade or JP Morgan, and that form pretty much lists your sales, proceeds, and the cost basis. So once you receive that form, it's just a matter of plugging those numbers into the tax return, and then you're compliant. But in the crypto world, the exchanges are not issuing a Form 1099-B listing your sales, proceeds, and the cost basis. And it becomes your responsibility to figure out the sales amount, the valuation, and the gains and losses by applying the right IRS ruling. Now, additionally, the process gets even more complicated because it's crypto. You can do trading in your exchanges, or you can have your own wallet, or you can have trading that's not going through the exchanges. You could have decentralized exchanges. There's DeFi platforms. So that's where the complications arise, and it becomes really, really difficult for people to do these, gain and loss calculations manually. So, so we saw this problem. That's why we have Cointracker. It's a software. Like, what you do is you sign up for an account, which is, by the way, free if you have up to 200 transactions. So when you sign up, you connect your exchanges, your wallets, or whatever the crypto trading platforms you have, and the software automatically calculates the gain and losses. And after that, it's just a matter of plugging that gain and loss number into your tax return. So we made it seamless, that calculation process.
So what is the government's recommendation as far to the IRS for collecting taxes from people?
Yeah, so the government is pretty clear about the taxation when it comes to crypto. The government is saying the cryptocurrencies are taxed as property. So as the taxpayer, you're responsible for keeping the cost basis, meaning how much you paid for that each unit of crypto, and also the records of the sales price when you sell them. And then you take the difference, and that's the gain that you're going to get taxed on. The IRS is mandating everybody to have, the reasonable records. Obviously you have to have, these are called substantiation requirements, meaning in case you get audited, you should be able to prove that, hey, I paid this much for Bitcoin at this price level on this date, and this unit was sold for this much on this certain day. So, before Cointracker, it was pretty, tedious task for taxpayers to keep these records because, yeah, I mean, one could argue that you can keep all the records on Excel spreadsheets, but because of the nature of this crypto world, it's really hard to do it manually. Because imagine you're transferring crypto from your one wallet to an exchange to a wallet, and you had to track the valuation at each second. And then sometimes you sell a coin, but that whole coin isn't get sold at the same time. You get like fractional sales. So in those cases, it's really hard to apply the IRS rules manually. That's why the automation is required to be compliant with the IRS, especially now if you're in the second, third year of trading crypto.
I think that this is why most people don't even think about it, because it's, as I'm listening to you explain it, for me personally, like, it's a bit overwhelming. Like, I understand the words, like trying to figure out a cost basis analysis, which I know I've read the IRS guidance on how to do that. And it's still a little overwhelming without thinking, oh my God, I need a tax attorney to help me figure this out. So the government just released updated guidance this year. Is that guidance different? Or what's the difference between the previous guidance, which I think was set out in either 2016 or 17, and the ones that they were just released in 2019?
Yeah, so let me give you the quick timeline. So the government first came up with the guidance in 2014. That was called 2014-21 guidance. It's pretty, available. You can just Google if you want to see it. And after 5 years of the issuance of 2014-21 guidance, on October 9th of 2019, the IRS issued 43, now it's 45, Q&As, explaining certain things that taxpayers had, issues on. Uh, so there's no major deviation from what we already knew from 2014-21, but two significant things that we got to know from the recent guidance were that airdrops and forks. So now the government is specifically saying that if you get airdropped, after hard fork, meaning for example, in last year, people who held BTC got the Bitcoin Cash. So in that case, the IRS is saying that you had to recognize income, as ordinary income when you receive that new coin as a result of a fork. In practical sense, sometimes it could be unfavorable for the taxpayer, because sometimes you get airdropped and you go through forks and you wouldn't even know, and then you get coins without you even asking for that. But according to the IRS rules right now, you had to recognize income. So I would say that's a major highlight of this new guidance, which could be unfavorable for the taxpayer if they go through a fork. If you take a look at the timeline, the first they came up with the rulings in 2014, and they took 5 years to come up with the next set of rulings. And when those next set of rulings comes here, and we are moving towards DeFi and decentralization and other platforms that government hasn't even talked about. So that's the industry that we are dealing with. The governments, and they're always slow. So we just had to apply the existing rules that we know to these new type of transactions, and being reasonable, being conservative, and just see what happens in the future.
Yeah. So you sent me some questions, and it says one of the questions was like, what do I do if I get a crypto tax letter? What is a crypto tax letter?
Yeah, so 2019, the summer of 2019, for the first time, IRS sent out 10,000 tax notices for people who dealt with cryptocurrencies. So these letters came out in three variations, letter 6173, 6174, and 6174-A. And I'll put you some links in the description below so you guys can see how these letters look like and what they're asking for. So pretty much these letters are saying that, hey, especially this is for 6173 letter, if you haven't reported your crypto transactions, you're supposed to do that. And in some cases, those letters say that even if you have reported something, we want to know how you calculated those crypto gains and losses. So that's the letter 6173, which is somewhat serious letter. And then the 6174 and 6174-A letters, these are just educational letters. These are just telling those taxpayers, hey, cryptocurrencies are treated as property. These are the tax rules that you should apply. And if you haven't done this, just make sure you amend your returns and things like that. So pretty much IRS is trying to educate the taxpayers and also alert the taxpayers that the service is looking into this. So you better get your things right.
It's interesting. I've never seen one of those. How many again did you say they mailed out?
10,000.
Yeah, that's actually not very much, but there's not very many people in crypto. I mean, we're only talking 13% or something of the U.S. owns crypto. Interesting. So, do you think that those letters will become more prolific in the future?
Yeah, I mean, in the next year, I'm pretty sure there's going to be another wave of these letters. So, in addition to these three letters that I spoke to you about, they have been sending these letters called CP2000s. It's another form of letter. So you might get a CP2000 letter. This is how it happens. So sometimes the Coinbase, they send you like a 1099K form. And what a lot of taxpayers don't do is they don't record anything on the tax return by using that form 1099K. And IRS has a system, it's an automatic system. So what they do is they match, so they compare the form 1099K amounts which were sent by the Coinbase versus what you reported on your tax return. And if the computer system finds out there's a mismatch, you're getting an automatic notice saying that, hey, you didn't record the form 1099K from Coinbase. So in those cases, the taxpayer has to explain, yeah, I got a 1099K, but then that amount isn't right because the 1099K only shows the gross proceeds. So as a taxpayer, you had to get that gross proceed and figure out the cost basis, and you had to calculate the gains and losses. So you just pretty much had to explain the IRS that I reported the right amount of gains and losses. So in case if you need to know like how to write those letters, I can send you a template. The Cointracker, we helped actually a bunch of clients who got those letters, and we helped them write these letters, and they attach the gains and loss reports that they derived from Cointracker. And actually, one person ended up getting a refund as well, and the other people they were successful as well, and the IRS accepted that those numbers are right. So if you get something, just let us know. But we have like a detailed guidance, like a step-by-step guidance on how to write a letter templates, and what needs to be attached as well. So I'll share with you, Kris, so that you can share with the audience.
That sounds really good. I mean, the whole process seems a bit overwhelming. Just the fact that you're like, yeah, we have a couple clients that got these letters and we personally helped each one of them respond to the IRS. Like that's a huge value add for your company and for your clients. so that's one of the ways. You mentioned somebody getting a refund. That's one of the ways people can save on their crypto taxes. I do want to ask about other ways, but first, I was thinking, what if Bob, who's been in crypto for 5, 6 years, has never reported their taxes, and then it comes to 2019 tax season, and some of these, and now they're reporting their taxes, but they still have records from these exchanges and whatnot. So um, what what happens? Is there a way, are they supposed to accumulate whatever happened in the past, or are they just reporting for that particular tax year, unless they need to then file an amendment for something that happened in the past? What would people do in that situation?
Yeah, there's this thing called statute of limitation. The statute of limitation, gives the power to the IRS, like how long you can go back to open up somebody's tax account and examine that person. So typically, the statute of limitation for a taxpayer is 3 years, meaning IRS could go back only 3 years, prior to this year on those tax years. However, if there's a substantial omission of income or there's fraudulent, meaning like somebody's intentionally trying not to record anything, IRS has unlimited statute of limitation, meaning they could go even further than 3 years. So I don't know what Bob, which category Bob falls under. So that's a first set of exercise that you had to go through, and 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 in generally speaking, IRS is pretty open about this issue. So if they see that somebody's taking reasonable steps to rectify their situation, or to make things right going forward, they're not going to penalize, because IRS knows that they got super late when it comes to issuing guidance, and then the people are struggling because they don't know about tools like Cointracker to reconcile their gains and losses, because not everybody have access to sophisticated CPAs who are doing this manually on spreadsheets. So IRS knows those issues. My advice is that to Bob in this case, as long as you're being reasonable, as long as you're trying to do the right thing going forward, you should be fine, considering this issue is pretty new to the IRS.
That's good advice. So going back to a previous answer, you mentioned one of your clients getting a refund. What are some other ways that people can save on their crypto taxes? I mean, really dig in and reduce either their liability, or keep as much as their crypto as they have, so they can hold instead of giving it to the government.
Great. I mean, good question, because before we go into the saving strategy, just know that tax is anybody's one of the biggest expenses, if you really think about it. So anything that you can to reduce it is great, because literally you're getting cash back at the end of the year. So there's few ways that you can save on taxes, especially if you have crypto. Obviously you can use Cointracker, and the Cointracker has this feature called tax loss harvesting. It's pretty much, making you look poor on the tax return, which is a good thing. I mean, obviously you want to be rich in the real life. So by using the tax loss harvesting method, at the end of the year, you can sell your positions that have gone down in value and quickly get back in to maintain the same position. And during this process, you're creating a loss, which would reduce your overall taxable income when you file the return. So it's an automated tool that you just have to click one button on the Cointracker dashboard, and that's going to take care of it. So that's one for sure. And the other thing is you can use a different type of we call it tax lot ID method. Like you can sell based on FIFO, the first in first out, or the LIFO, or the HIFO. The HIFO means the highest in first out. Meaning, like, if you want to, let's say you want to sell like Bitcoin or something, so you can specifically pick the one Bitcoin you got for the highest amount of cost, because that way you're reducing the gain for that trade. Again, if you have a lot of transactions, it becomes really hard to do this manually. But in Cointracker, you can pick FIFO for the FIFO, the LIFO. There's different type of tax lot ID method, and then the program kind of optimizes the gains and losses based on what you pick. There's other sophisticated ways to save money as well. Like I actually wrote an article to Forbes, which got like over 20,000 views in like 2 days. You can convert your existing Roth and regular IRA into a self-directed IRA, and then you can buy crypto inside that self-directed IRA, and all those gains that you're getting inside the self-directed IRA account is tax-free. So great way to create crypto and save for your retirement as well, completely tax-free.
So with all that, with all of that being said, loss harvesting, first in, first out, calculating, dealing with the tax form at whatever level that of holdings that you have, or however simple or complicated they are. How can Cointracker help in being able to do all that stuff? Like, what's the process?
Yeah, the process is super simple. You sign up for a Cointracker account. And obviously it's a SaaS platform, so we have an annual subscription. However, if you have less than 200 transactions for any year, it's completely free. All the tax reports, all the tax loss harvesting tool I spoke to you about, and all the other features are absolutely free. So I assume that most of the crypto users in the US right now, they don't have more than 200 transactions, especially if you're an amateur, or especially if you're somebody who's getting into crypto. So we are pretty excited about this free tier, because we believe that by putting this free tier, uh, we're gonna help the adoption of crypto by masses by providing like a very vital infrastructure layer. Because yeah, Coinbase is doing their thing, but this is how we can help the crypto people go mainstream. So the process is simple. Like I mentioned, you sign up for an account, you connect your exchanges, wallets, and everything using a read-only API key. You can also upload information through CSVs, and then it's just 2-3 minute. You just hit the calculate button, or just refresh the screen, and then you get the Form 8949, Schedule D, Schedule 1, which you can download and use it if you're preparing a return. If you have an accountant, we have a special feature, so you can just click the share with my accountant button, and those reports go to your accountant, and then the accountant can use your reports to prepare your taxes. So it's pretty easy. The once connected, it's you don't have to do anything. Everything is automated through the API. So next year, you don't have to do anything unless you have a new exchange that you want to connect.
So I don't have to, like, every time I make an exchange, write it in my spreadsheet and hold it
No.
off until tax season of next year. You guys take care of all of that tracking.
Absolutely. Yes.
So where can somebody find you?
Yeah. So our website is www.cointracker.io. And obviously we'll put some links and descriptions below. Follow us on Twitter at Cointracker, and LinkedIn, and you can also search for me, Shehan, space Forbes. So for the past few weeks, I've been kind of dissecting this, the new questions arising in the crypto world, and writing to Forbes in a very simple way. So if you have any questions, I highly recommend you reading those posts. And also we have a very active blog in cointracker.io account. Those blogs answer most of the things that we spoke about, and also some of the questions you may have.
Okay, so let's say I sign up. I get in. It's supposed to be easy, but I don't understand it. Like, how is your support? Like, do you guys have basically like account managers for people? Like, if I call up and like I'm always going to talk to the same person, or how do it? Because you mentioned earlier that you helped people write some letters to the IRS. That seems like a pretty personal service. People are used to dealing with accountants who also provide a personal service. At what level is Cointracker in that?
Yeah, so there are ways that we can interact with the clients. Obviously, we have a chat support. We have a forum where users answer everybody else's questions. We have a pretty thorough Q&A section, blog, and then we have this 2020 crypto tax guide, It's like a 10-15 page website that the web page you can find on our website, where we pretty much simplify everything that you need to know as a taxpayer. And if you have specific questions like, okay, I got a letter, or I'm setting up this crypto hedge fund in Cayman Island or something like that, you can email us directly through the support, and then you will get person who's an expert in that area, kind of help you with the integrations and things of that nature.
That's great to hear, because I know everybody's needs are a little bit different. Like what may cover 80%, like you're going to have that 20% that just has some kind of like crazy thing that they can't do right on the web page. I know that like from even in Exodus in the wallet, we see that as well, talking to our customers. And like one thing we've learned over the time is that everybody's needs are a little bit different. Some are more similar than others, but everybody has their own individual strategy for saving and buying, and getting into crypto. And so this is, I'm just glad that most crypto pitches, when you're trying to introduce people to the ecosystem, don't start with like, oh, hey, first off, you're going to have to pay taxes on all this. Now, let me tell you about the virtues of Bitcoin, because people will be like, well, why even bother? What are some best practices people can do with their portfolios? Most people have multiple wallets. Most people have multiple exchange accounts. Like what can people do to make it easy on them, so when it comes to tax time that they're prepared and they don't even have to think about it?
Yeah, I think the record keeping is the key with the IRS. Anytime you get examined or get a notice, like you should have the right to support your record keeping and the valuation and everything. So I wouldn't try to do it on on my own. As soon as you make that first rate on the Coinbase or wherever you make your first rate, please subscribe to a Cointracker account. It's just free. Connect the exchanges. That's it. And then you just worry about it towards the end of the year. End of the year, you just calculate, you just hit the button, and then the coin tracker is going to give you what you need for your taxes, give it to your tax accountant, you're good to go. So that's my advice.
It's good advice. Thanks, Shehan. I really appreciate you taking all your time to spend with us and to help share some of this information with the people on our channel and hopefully your future customers.
Thanks, guys. Thank you for having me, Kris, and the Exodus team.
Excellent. We'll touch base with you closer to April 15th, when people are really interested in finding out what they need to do right away.
Cool.